let's pick up growth. Do you think in the United States today, Wall Street has sort of been a little too ahead of the growth story, higher and much ahead than Main Street? And in that sense, is there a correlation between what is being bet as a global growth recovery versus the capital market euphoria and recovery we've seen so far?
It's nice to see the U.S. starting to recover, and we're seeing that. It's growing well. And, of course, there's more work to be done. And you're right. One of the things we want to see happen is we want to see unemployment go down in the U.S., more job creation. But some of those things are structural and result of the fact that a large part of the U.S. economy was housing. A large part of it was mortgage broken. Some of those jobs are not going to come back to the same extent that we had them before. And the phase we're actually going through in the West and in the U.S. is a restructuring phase. We need to find new industries, new economies, new companies to serve different clients, to create different products. That takes time. That really takes time.
So in the meantime,
our role is to support that regeneration. In the meantime, unemployment is higher than what we'd like it to be. And it's not exactly a jobless recovery. We're adding a lot of jobs. It's just that we need to add a lot more jobs, and it takes time.
What's your understanding of the liquidity situation today? I mean, we do have surprises, what we're seeing in North Africa and Middle East, that could cause a little bit of an volatility there. But do you think liquidity will be a concern in the months ahead, even as recovery comes back, because of caution?
The capital markets are fairly robust. Of course, they react to world events, as you would expect them to. But when you look at the amount of liquidity or cash with U.S. corporations, as an example, they have over $2 trillion on their balance sheet, which is a lot of liquidity. And when you look around the world and look at where interest rates are and where the capital markets are willing to provide larger and middle-sized companies what they need in terms of borrowings. So there's a lot of funding and a lot of liquidity available to help companies grow. If they would like to raise money, it's there. If they want to invest, they have access to money. We don't see that changing dramatically.
And Basel III, something you're likely to talk about in detail as well, I guess, at IIF in some ways. It's being talked about as a great reform measure, but are you a big supporter of that idea?
We and the regulators have exactly the same objectives, and those objectives are evident in Basel III. And they are, one, to make sure that we have a stable financial system, two, to have banks go back to the basic, act like banks, serve the real economy, help clients, and three, grow the economy and make sure there's enough credit available so that business people, when they need money to invest, they have that availability from banks. That's been the focus, and we actually at Citi have been one of the strongest proponents of regulatory reform. And we're getting a lot of that from Basel. It's headed exactly in the right direction. What we also need to do is make sure we calibrate the measures just right, so we have a safe financial system, but we also have growth. And that's the process everybody's involved in right now. I'm very confident we'll come up with the right answers.
You know this better than me, but regulation is going to be part of life, isn't it? And in that sense, that relationship will evolve as the economies change, as the global situation evolves as well. How prepared are you for regulatory interference as a bank, as a banker in the system?
Good regulation and strong regulation makes for stronger financial markets and better financial institutions. That's a very important perspective for all your viewers and everybody to understand. A safer financial system allows us to grow, allows us to serve our clients, allows us to serve the real economy with confidence.
But you're not saying this in hindsight, are you?
Sorry?
You're not saying this in hindsight, are you?
There are lots of lessons that get learned over time as we go through different events and different incidences, but this is what it takes to have a strong financial system. So we are going to have, and we do have, close relationship with regulators, and we're going to have closer relationships with regulators going forward. But I look at that as a relationship that's important because it's our collective job to keep the system working, stable, strong, to allow the real economy to grow. When it grows, we all do well.
Okay, would you give a thumbs up to the Indian regulators as you talk about regulators across the world for what they've managed to keep together here?
Just look at the last crisis and look at how well India has performed through all of that. And really hats off to the Reserve Bank, to SEBI, and everybody in the country for having had the right approaches to regulation, the right perspectives in mind, and for that matter, the right tools in place to be able to manage the economy through the challenges that were faced over the last 2-3 years. It's a great story. For us as an organization at Citi, financial inclusion is a great, great goal for us. A place like America, there are a lot of unbanked people, and a simple example for you is that we're working with the state of California on something called Bank on California, where we are providing our capabilities to help unbanked people get bank accounts, learn how to save so that they can build assets. You make sure you do what you're passionate about, because that's the secret to success.